Okay, so for question A, schedule of expected cash collection. So first of all, cash sales, we can get the amount for November and December, both from question, which is November. The amount is 340,000 ringgit, and December is 360,000 ringgit. Next, collection on account receivable for 3 months, which is October, November, and December. So for October, the amount is 83,200 ringgit. We can get the amount from question. Meanwhile, November, we can get the amount, which is 255,000 ringgit, by multiply 340,000 ringgit with 75%. For the following month, which is December, we can get the amount, which is 85,000, by multiply 340,000 ringgit with 25%. Next, for December, we can get the amount is 270,000 ringgit, by multiply 360,000 ringgit with 75%. So for the total cash allocation for November, we get the amount, which is 338 ringgit and 200 ringgit. Meanwhile, December, we can get the amount 355,000 ringgit. Okay, next for question B, which is merchandise purchases budget. So first of all, budgeted cost of goods sold. For both months, which is November and December, we need to multiply the amount of cash sale of each month, which is November and December, with 71%. So we can get the amount of budgeted cost of goods sold. The next step is we need to add with desired ending inventory. For November, the desired ending inventory, we can get by multiply 75% with the amount of following month. So 75% multiply with 255,600 ringgit. Meanwhile, December, we need to multiply 75% with 248,500 ringgit. So if we add budgeted cost of goods sold and desired ending inventory, we can get the total needs for November and December. The next step is we need to minus total needs with beginning of inventory. So beginning inventory for November, we can get the amount from question. Meanwhile, beginning inventory for December, we can get the amount from desired ending inventory for November. So we can just drag the amount desired ending inventory for November to beginning inventory for December. So if we minus total needs and beginning inventory for both months, we can get the required purchases for November and December. Okay, next for question C, which is cash budget for November and December. So first of all, beginning cash balance for November. So beginning cash balance for November, we can get the amount from question, which is 22,200 ringgit. And then the next step is add with cash collection. So cash collection amount for November, we can get the amount from total cash allocation from question A, which is the amount is 338,200 ringgit. So if we add beginning cash balance and cash collection, we can get the total cash available for November. So the next step is less with cash disbursement. Cash disbursement for November is inventory purchases and other monthly cash expenses. So inventory purchases, we can get the amount from question, and other monthly cash expenses also the amount from question. So if we add inventory purchases and other monthly cash expenses, we can get the total cash disbursement for November, which is 217,600 ringgit. So the next step is to find excess deficiency of cash for November. So the step is by minus the amount of total cash available with total cash disbursement. So if we minus those amount, we can get the excess deficiency of cash. So the next step is minus with financing. November reported with zero amount of financing. So if we minus the excess deficiency of cash with financing on November, we can get the ending cash balance for November, which is 142,800 ringgit. Okay, next for December, we can drag the ending cash balance for November to amount of beginning cash balance for December, which is 142,800 ringgit. And then add with cash collection, which is we can get the amount from question. So if we add those amount, we can get the total cash available for December. And then the next step we need to less with cash disbursement, which is inventory purchases for December. We can get the amount from question B, which is required purchases for November, which is the amount is 252,050 ringgit. And then other monthly cash expenses is the same amount with November, which is we can get from question, and the amount is 21,400 ringgit. So if we add those two amount, inventory purchases and other monthly cash expenses, we can get total cash disbursement for December. And then we minus with total cash available, then we can get the amount for excess deficiency of cash, and then minus with financing amount, which is reported as 0, and then we can get the last amount for December, which is ending cash balance for December is 224,350 ringgit.
Next, for the question D, prepare budgeted income statements for November and December. The format for the budgeted income statement is sales minus with cost of goods sold, and we will get gross margin. Then we minus with other monthly expenses and depreciation. Then we will get the final amount of net operating income. Okay, the first one is we calculate the amount of sales based on the additional information. Sales are budgeted at 340,000 for November, 360,000 for December, and 350,000 for January. So we take from the additional information the amount of sales for December, which is 340,000, and 360,000 for December, minus with cost of goods sold. For cost of goods sold, from the additional information, the cost of goods sold is 71% of sales. So we take the amount of sales for November, 340,000, and we times by 71%. Then we will get the 241,400 for cost of goods sold for November. And then for December, 360,000 times by 71%. Then we will get the cost of goods sold, 255,600 for December. After that, we minus the cost of sales with cost of goods sold. We will get the gross margin for November, 98,600, and 104,400 for gross margin for December. Next, we minus with other monthly expenses and depreciation. For other monthly expenses, from the additional information, the other monthly expenses to be paid in cash are 21,400. So we just enter the amount of 21,400 for both November and December. And for depreciation, the monthly depreciation is 21,200, and we just enter the amount for the both November and December, 21,200. After that, we calculate the amount of gross margin minus with other monthly expenses and depreciation, and we will get the final amount for net operating income, which is 56,000 for November and 61,800 for December. The last one is for the question E, prepare a budgeted balance sheet for the end of December. The format for the budgeted balance sheet, the first thing is we need to calculate the amount of asset. The first item that we need to calculate under item asset is cash. The amount of cash is 224,350, which is we get from the cash budget under column excess deficiency of cash for the month of December. And the next column is for account receivable, which is from the additional information. Collections are expected to be 75% in the month of sale and 25% in the month following the sale. So we calculate 360,000 times with 25%, and we will get 90,000 ringgit for the account receivable. For the next column is for inventory. We get 166,375, which is we take from the merchandise purchases budget and the column desired ending inventory for the month of December. The last item for asset is property, land and equipment, net of 638,400 accumulated depreciation. For the amount of net accumulated depreciation, we calculate by 566,000 minus with monthly depreciation, which is 21,200 times 2, we get 42,400. So 556,000, 96,000 minus with 42,400, and we will get the net accumulated depreciation 638,400. So for the total for the property, land and equipment, we get 963,600, which is we calculate 1,006,000 minus with 42,400, and we will get the total amount for property, land and equipment 963,600. So after that, we sum out everything for the item asset starting from the column cash until property, land and equipment. We will get the total asset 1,464,325 ringgit. So next we continue to calculate the amount for liabilities and stockholders equity. which is the first item is account payable. We get from the merchandise purchases budget under column required purchases for the month of December, which is 250,275 ringgit. And the next column is for common stock. We take from the balance sheet of 31st October, 640,000. And for the last item is retained earnings, which is we calculate 456,250. The retained earnings from October 21st, which is can get from the table. We plus with 56,000, the net operating income for November, and 61,800, the net operating income for December. And we will get the total of retained earnings, 574,050. After that, we sum up everything for the item under liabilities and stockholders' equity, starting from account payable until retained earnings. Then we will get the total liabilities and stockholders' equity, 1,464,325 ringgit.
For question number 2A and B, this is our references. For actual hour, we combine the times given, which are normal time and overtime. Move on to question A. The cost of first element we calculate for actual hour multiplied by actual rate for normal time, and then we calculate for overtime. Total out we get 24,080. Then we minus the actual hour multiplied by standard rate of 7 ringgit, we get 23,800. So we get the unfavorable amount of direct labor rate variance, which is 280. Next, for question B, the standard rate of 7 ringgit we multiply by total actual hours of 3,400 hours. So we get 23,800 minus with the standard rate, 7 ringgit multiplied by standard hours, which we get from 800 units produced, multiplied by 4 hours given in the first table of the question. Then we get the unfavorable amount of direct labor efficiency variance, which is 1,400. This is our references for question 2C and D. Consists of actual quantity, actual price, standard quantity, and standard price. As for question 2C, direct material price variance, for iron we get 0 since the actual and standard price are the same, which is 2 ringgit. For copper, we get the unfavorable amount of 220. First of all, we multiply the actual quantity of copper, 2,200, with the actual price of 3 ringgit and 10 sen. So the total we get is 6,820. Then minus with the actual quantity, 2,200, multiplied by standard price, 3 ringgit, with the total 6,600. 6,820 minus 6,600, we get 220. So that's how we get the unfavorable amount for copper. For question 2D, we get favorable amount of 200 for direct material quantity variance for iron, because the standard cost is higher than the actual cost. First of all, we multiply standard price of iron, which is 2 ringgit, with the actual quantity of 3,900. Then minus with the standard price 2 ringgit multiplied by standard quantity 800 units produced, multiplied by 5 pieces. Using the same method for calculating direct material quantity variance, we get the unfavorable amount of 600 for copper.
For questions E and F, we need to calculate the overhead expenditure variance and overhead efficiency variance. To determine these two variable overhead variances, the standard variable overhead rate per hour and the actual variable overhead rate per hour must be determined. According to the information in the question, the actual labor hours used are 3,400. Meanwhile, the standard labor hours are 3,200 hours. The standard or budgeted variable overhead rate is 3 ringgit per direct labor hour, and the actual cost of variable overhead is also given in the question, total of 12,000 ringgit. Therefore, for question E, which is to determine the overhead expenditure variance, the actual cost of variable overhead given in the question is 12,000 ringgit minus 10,200, which is 3,400 actual hours, multiplied by the 3 ringgit standard rate. Then we will get the answer is 1,800. This produces an unfavorable outcome because the actual costs are higher than the standard cost. Meanwhile, to determine the overhead efficiency variance in question F, 3 ringgit standard rate times with 3,400 actual hours, we will get 10,200. After that, minus 9,600, which is 3 ringgit standard rate times with 3,200 standard hours that were already calculated in the previous slide. Then the total we will get is 600. In this case, the variance is unfavorable because the actual cost is higher than the standard cost. For the next question, which is questions G and H, we need to determine the budget variance for fixed overhead and volume variance on fixed overhead. Therefore, the information required to compute these two fixed overhead variances is the actual cost of fixed overhead that already given in the question, which is 8,800. The standard fixed overhead cost is 8,000, which is 4,000 direct labor hours times with RM2 standard cost of fixed overhead. Also, we need to know the actual and budgeted volume to find the volume variance on fixed overhead later. Therefore, the actual volume is 8,000 and the budgeted volume is 6,400, which is 800 units multiplied by 4 hours and RM2. To determine the budget variance for fixed overhead in question G, the actual fixed cost is 8,800 minus the standard fixed cost, which is 8,000. Then we will get the answer is 800. The variance is unfavorable because the actual spending was higher than the budget. Meanwhile, for question H, to determine the volume variance on fixed overhead, the actual volume is 8,000 minus the budgeted volume of 6,400. The total is 1,600, unfavorable because the actual volume was higher than the budgeted.